Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences.
Good day, I'm Abby Overton, and this is The Real Deal. At the top of the news, President Bush proposes subprime mortgage reforms that will help borrowers. The mortgage meltdown claims 14,000 financial sector jobs, and New York City home prices drop further than the national average. Also this week, we introduced the new monthly Shark Report, a joint venture of The Real Deal and PropertyShark.com, to be broadcast by Ryan Slack, Property Shark's CEO. This week, Mr. Slack will talk about his company's newest findings in the trading of walk-up buildings. That and more on The Real Deal webcast this week. And now for the news. President Bush addressed the subprime mortgage crisis last week with a proposal to help homeowners with subprime mortgages avoid default. He discussed the need for Congress to pass Federal Housing Administration legislation that would provide the agency flexibility to help subprime borrowers. One move may guarantee loans for borrowers behind in mortgage payments by 90 days or more to help them avoid foreclosure. Just over 14,000 jobs have been cut in the housing-related financial sector in New York and New Jersey, according to an outplacement firm, Challenger, Gray & Christmas. The total number of cuts in the mortgage lending area this year is already more than triple the 2006 total. An index compiled by Standard & Poor's reveals that home prices declined in the New York metropolitan area by 3.4% in the second quarter, higher than the national drop of 3.2%. S&P's data covered through the end of June, and with August's acceleration of the mortgage industry downturn, the third quarter is expected to bring further deterioration in the home market. And now we turn to Ryan Slack, CEO of Property Shark, and our new segment, The Shark Report. Ryan?
Thanks, Abby. Good morning and welcome to The Shark Report. Today we'll be detailing the results of our first ever walk-up apartment investment study, in which we analyze recent trends in the trading of 5+ family rental buildings. Returns are lower than they've been in recent history of New York City walk-up apartments. And while recent economic conditions have halted the upward trend in price per square foot, the amount of arm's length trading remains robust. Arm's length sales are transactions made between independent buyers and sellers and not related parties. Let's talk numbers. Transaction volume of walk-up apartment buildings increased 32% to $1.4 billion in the second quarter of 2007, higher than any of the past 10 quarters. The number of sales increased to 550 in the second quarter, up 15% from the same quarter in 2006. Citywide, the average building sold for $2.5 million versus just under $2 million in the year previous. This put the average price per square foot at $187, or 28% higher than in 2006. Even with the rosy news, flippers of walk-ups did not see high returns in the second quarter. Despite the recent run-up in returns, investors turning over their properties in less than 5 years saw their gains drop from 40% in the second quarter of 2006 to 23% in 2007, a 2-year low. What does this mean for the investor? All indications are that smart money is getting out of the market, and the upward trend in prices has stalled. The second quarter walk-up sales report can be downloaded exclusively from RealDeal.com and PropertyShark.com. I'm Ryan Slack, and thank you for tuning in to The Shark Report. Abby?
Thanks, Ryan. Bovis Lend-Lease executive James Abadi defended the contractor's work dismantling the former Deutsche Bank tower, where a fire killed 2 firefighters August 18th. Abadi, speaking at a public meeting, said at least 6 safety managers worked full-time at the tower, which was abandoned after it was badly damaged by the falling World Trade Center. Also Wednesday, one of 3 disciplined fire department officials said an FDNY policy warned against entering the contaminated tower. Mahmoud Khimji's Highgate Holdings has purchased the On the Avenue Hotel on the Upper West Side for $201.35 million from Rockpoint. The big boutique hotel is between 76th and 77th Street, was built in 1912 and has a 2-story penthouse. Restaurants could be launched there by Jeffrey Chodorow and Tom Valenti, owner and chef at West. As Coney Island winds down this Labor Day weekend, the amusement park's future rides on the dispute between the city and developer Thor Equities, which wants to build a $1.5 billion Las Vegas-style resort on the site. Some speculate that Thor principal Joe Sitt could flip his beachfront properties to another developer, demolish the buildings he owns along Surf Avenue, and then hope the city caves on rezoning. He may also be hoping to exchange his 10-acre swath of land for 8 acres of adjacent city-owned property. Some real estate experts wonder if the city could use eminent domain and cite it as blighted, and then find a new developer. Mayor Michael Bloomberg offered lukewarm support last week for pursuing a federal disaster designation for city homes damaged by last month's tornado. He said there were no real injuries and a limited number of houses destroyed. Governor Spitzer and Senators Clinton and Schumer have all endorsed the federal designation, which would bring in federal aid for the estimated 1,360 homes damaged in Queens and 189 in Brooklyn. The owners of Sterrett City, a partnership led by Disc Dean, are taking the first steps to convert almost 6,000 apartments to market-rate rents and exit government housing programs. However, they also said they have not made a final decision about the huge complex in Brooklyn's Jamaica Bay. New York's parks keep attracting more upscale developments. Between Central Park West and Broadway and 61st and 62nd Streets, the sold-out 15 Central Park West is reportedly the city's most successful apartment complex ever, where at least 15 apartments sold for more than $20 million. The converted Plaza Hotel reopens as apartments on October 1st and has reportedly sold units for $50 million. At 220 Central Park South, a 41-story condo tower is planned, with units expected to sell for at least $2,500 per square foot. And at 111 Central Park North, a 48-unit, 19-story condo tower is expected to open this fall after breaking Harlem records with sales of up to $1,700 a square foot. Harlem residents have voiced their concerns that Harlem Park, a $236 million project on 125th Street and Park Avenue, will not bring the jobs the project originally promised. The original plan would have built a Marriott, the neighborhood's first big hotel in decades, and would have created 2,500 jobs, but developer Michael Caridi sold his interest to Vornado Realty Trust in 2005. Now, Vornado plans a 21-story, 640,000 square foot office tower, and residents fear the development may not bring the same economic or cultural benefits. In the biggest post-Hurricane Katrina hotel sale, Partners Realty and Deutsche Bank Group have purchased the 700-room Astor Crown Plaza on New Orleans' Bourbon Street for $93 million. One real estate company with a non-traditional business model, 90% commission splits to agents, is offering another new twist to stimulate deals and attract new agents. Starting Saturday, City Connections Realty agents who earn at least $200,000 over the next year will receive refunds of 50% on their monthly desk fees, which range from $800 to $1,275 a month. The new Elite Broker program will offer agents earning $250,000 in annual gross commissions a 100% rebate on their desk fees. The founder and manager of CBGB's, Hilly Crystal, died Wednesday at the age of 75. His former space, site of the famed rock club, was recently gutted. The Bowery Residence Committee, which evicted CBGB last year and raised the rent to $65,000, is looking for an upscale tenant willing to pay their price for the 13,000 square foot space. Thank you for joining us for this edition of the Real Deals webcast. Please join us every week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.